I think one of the important things for banks to do is actually make clear choices about how they want to compete in the digital economy. In the past, banking has been a somewhat protected and vertically integrated business. And one of the things that's changing, both through technology and also through regulation, is that the traditionally vertically integrated bank is being chopped up into pieces. So I think now going forward, there's far more scope for banks to choose different business models and choose how to compete in the industry. So I think it's about clarity of choice. It's about understanding where you can win and lose, and then focusing what are still scarce resources to make sure that you have a compelling proposition in the area that you choose to compete in. I think the choices really sit on two dimensions. One is how much of the customer need set do you want to serve? Many traditional universal banks have tried to be all things to all people. They've tried to satisfy everything from mass market through to large corporate. That's one dimension, is do you want to serve everyone or do you want to serve a particular segment or niche? The other choice is how much of the value chain do you want to participate in? Traditionally, banks have had their balance sheet, they've manufactured product, they've controlled distribution, they've tried to control as much of the value chain as possible. Now I think there's opportunities to maybe just be a front-end customer manager, to be a back-end utility player. So I think the combination of those two dimensions, gives you lots of different options. Many banks, I think, will default to just trying to be a digital version of themselves, which means trying to still maintain value chain control and try to be everything to everybody. I think that will be tough. So I think we will see more banks look at, can we be a niche player? Can we dominate in an area of credit or payments? Can we be a provider to other either big tech or fintech players and just be a provider of product? Or can we actually be an open platform and plug in third-party products and be the place where people come for financial services? So I think making those sorts of choices is important. But I think one of the things that banks should also consider is you don't need to be dominated by one set of choices in one market. I think we're seeing many banks now being something different outside their home market than they're being within the home market, and taking the chance to experiment internationally with different models, some of which are maybe digital challenger models, some of which are third-party distribution models, and really putting bets down on different options in different markets. I think banks need to really look in the mirror, and they need to really be clear about where they have the advantage. Do they have the advantage by being a customer manager, where they actually have a trusted brand, they have a lot of, sort of legacy customer base, or are they a low-cost efficient producer? Are they a great risk manager? Are they a great design-led thinking technology firm? I think really being clear about which capabilities you have where you can excel, and then looking at how those capabilities map to the business model is what's going to be important. I think that, as I said, there's a default option, which is we'll just keep being what we've been in the past. And I think if you look outside financial services, the level of disruption in the media, in entertainment, in retail, suggests that just an evolutionary approach of just being what you've always been, it may not be enough. So I think clarity about what you do well, how those things map to different business models, and then being very intentional about stripping away everything else and really being focused on succeeding in the business model that you choose to pursue. That's what's going to separate the winners and the losers, I think.